As a financial advisor, one of the biggest questions I get is, Jim, how do I increase my Social Security? What are the things I can do to maximize my benefit? On today's show, we're going to talk about the top 5 things you can do to increase your Social Security. Hi, my name is Jim Martin, and I'm a financial advisor with Martin Wealth Solutions. Social Security will likely be one of the largest decisions you make in retirement. And for good reason. It will likely account for a large portion of your retirement income. And for many people, you just can't afford to get it wrong. There is good news though. There are some strategies that if you follow, you will likely increase the overall size of your benefit, which means more money in every Social Security check. Today, we're going to cover the top 5. Number 1 on our list is working a full 35 years. You see, Social Security is calculated based upon your top 35 years of working history, not your last 3 and not your last 5 or your top 10 or all of the other ideas that are floated around in internet forums and amongst other people. They actually take a look at your top 35 years and then they index that for inflation. Now, here's the rub on this. If you had zeros, meaning hey, you retired at 60 and you only had 30 years of working history, that will impact your Social Security. Working for a full 35 years will increase the overall amount of your Social Security. Just like school, remember, if you had a bad grade or you had a 0, it will negatively impact your Social Security benefit. Now, one of the easiest ways to review how many working years you have is to go to ssa.gov. That's ssa.gov, and I'll make sure I put that in the show notes as well. And you can pull your earnings history and it will show you all of your years of income. And you'll be surprised when you look at what you made when you're 22 years old and what you make is compared to now. But you'll be able to see what your 35 years are or how many years you'll need to work in order to get there. And I do recommend leveraging the calculator on the Social Security Administration's website in case you do plan to retire early. That way, you will understand the impact if you only have 31 or 32 or 33 years. Remember, when they're building your calculation, they're going to assume that next year you'll make similar or at a higher rate as opposed to what you earn this year. They don't understand that you have plans to retire earlier and maybe you won't reach your full 35 years. So take a hard look at that and make sure you understand the impact of what early retirement can have on your overall Social Security benefit. Hey, if you're finding value in this content, do me a favor, hit that like button, the thumbs up on your screen. It lets other people know all about our channel and what we're doing here. In addition to that, make sure you hit the subscribe button. We try to release a new video every week. Number 2 on the list, wait longer to collect your benefits. That might seem obvious, but if you turn your benefits on early, you will have a deduction in your overall benefit. You see, Social Security is based upon what we refer to as your full retirement age or your primary insurance amount. And for most people, that's going to be anywhere from 66 to 67, depending upon the year you were born. If you turn your benefit on earlier, say 62, 63, 64, you will have a decline or a reduction in your overall benefit. The problem with that reduction is you have to live with it forever. Not only does the reduction hurt you initially as you claim your benefit, it will have a larger impact over time. Let me explain. Social Security receives what we refer to as a COLA increase, which is a cost of living increase. And let me explain how that has an impact over time. If you turn your benefit on at 62, and let's imagine that benefit was $1,000 a month, or you turn it on at 67, and let's imagine that benefit was $2,000 a month, when Social Security initiates what we refer to as a COLA increase, each of those benefit amounts will receive the same percentage of increase. However, let's imagine it was 3%. 3% of $2,000 is more than 3% of $1,000. So while you'll still get the same percentage increase that everyone else gets, your actual dollars that you would receive would be less over time. So be aware, if you turn your benefit on early, it will have an impact on your overall dollar. So if you want to increase your overall Social Security, delaying your benefit could make sense and will increase your Social Security amount. Number 3 on our list, using spousal benefits to your advantage. If you're married, you might be able to leverage the opportunity to delay one Social Security while taking the other, thereby increasing Social Security benefits. Understanding how spousal benefits work relative to your Social Security plan could increase the amount of money you receive from Social Security. You see, when you make your Social Security decisions, don't make these in a vacuum. Understand how it'll impact your spouse, understand how it'll impact you, and then understand how it'll impact the rest of your retirement plan. Understanding how spousal benefits work could increase the amount of Social Security you receive over your lifetime. Number 4 on our list, understanding how survivor benefits work relative to Social Security. Knowledge is power, especially when it comes to something as complex as Social Security. And understanding how the survivor benefits work if you're married will be critical to your financial planning and ensuring that you can earn the maximum available. This is commonly referred to as the breadwinner benefit. And what it means is when one spouse passes away, you're going to keep the higher of the two amounts. So allow me to give you an example. If your spouse's Social Security benefit is $1,500 and your benefit is $2,000, when one of the spouses pass away, you'll keep the $2,000 a month benefit. This can be really important, especially if there's a gap between your ages. For example, if a husband is 67 years old and his wife is 60 years old, leveraging the breadwinner benefit to your advantage could have a real impact. You might make a decision to delay one Social Security to increase that amount as large as possible while taking the other benefit early, thereby ensuring that the surviving spouse will receive a much larger benefit than if they had just both turned their benefits on at the earliest possible time. Understanding how the survivor benefits work and how to leverage those and use those to your advantage could potentially increase the overall payout in Social Security to you over your lifetime. Number 5 on our list, manage your Social Security taxes. Whether you know it or not, Social Security is taxed. Now, the state you live in might not have taxes on Social Security, and that's actually really nice depending upon the state you're in. In my state, in Virginia, there are no taxes on your Social Security benefit from the state level. However, there are taxes on the federal level. And understanding how Social Security is taxed could potentially help you pay less over time. Let me explain. Social Security is taxed at what we refer to as provisional income. And the way provisional income works is you take 1/2 of your Social Security benefit plus everything else less Roth IRAs. Now, don't get mad at me. I didn't write the tax code. Let me say that again. You take 1/2 of your Social Security benefit, all of your other income less your Roth IRA distributions, and you've come to what we refer to as your provisional income. Now, depending upon where your provisional income lands will determine how much of your Social Security benefit will be taxable. Now, no matter what, 15% of your Social Security benefit is going to be tax-free. Managing your taxes around Social Security could mean, though, that you can have 100% of your benefit tax-free. We have seen clients leverage their savings accounts or their brokerage accounts in order to keep their income at a low level while still having enough money to pay their bills, thereby not paying taxes on their Social Security. Understanding how these Social Security benefits work, how they're taxed, can lead to a better outcome for you, thereby increasing your benefit. Remember, the old adage goes, it's not what you make, it's what you keep, and that is equally true in regards to Social Security. Now, I encourage you, before you turn on your Social Security benefits, to make sure you have a thorough understanding of how the program works, how it will affect your spouse, how survivor benefits work, and most importantly, how it will impact the rest of your financial situation. You don't want to make these decisions in a vacuum because your Social Security decision will have consequences as it relates to the rest of your financial plan. If you like this content, do me a favor and hit that thumbs up button. It really helps other people learn about our channel. In addition to that, hit the subscribe button if you want to hear more from us. We try to release a new video every week. Thanks for watching, and remember, plan well and retire happy.